Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the latest cues on the day straight in terms of the benchmark index moves, the sectoral moves as well as some of the stocks that have been buzzing in trade and what should be your investment strategy. The experts are advising investors and all of those advice we will get to you in a bit. But first up, a quick check on how the markets are doing at this point in time. It's been a volatile start to the day and right now you can actually see the Nifty still below that 17,000 mark, about 55 points lower in trade. The Sensex hovering 175 points lower at 57,382. That's a cut of 0.3% in today's trading action. Both the mid and the small caps are also down in trade, especially with the small caps that are dragging the most. About 0.7% of a cut can be seen for that one. India VIX, the volatility gauge is up by 2.5% at 16.7. So that's the index that you want to continue keep an eye out on. When you talk about the market breadth, it is favoring the declines, although slightly on a more divided side. 28 stocks on the red, while 22 stocks advancing as far as the Nifty 50 stocks are concerned. In terms of the sectoral moves today, you're actually seeing some mixed reaction right there, with the maximum fall coming in on the metals pack where heavy profit booking can be spotted. 3% of a cut for that one. The Nifty Bank is slower in trade by about 0.7% odd, led by losses in all three segments, be it the private banks, PSU banks and the financial services space as well, largely led by the losses in private banks today. Apart from this, you're also seeing some losses coming in on the IT pack. The financial services, I already spoke about, it's about 0.5% cut you can spot for that one too. The only sectors that are perhaps up in trade today are the FMCG pack, that's up by about 0.5%. The realty space, that's up by 0.3% in today's trading action. Pharma stocks are in fact leading the way, about 0.9% of an uptick for this one as well. And the media stocks are doing well as we speak. In terms of the top gainers and the losers, on the Nifty 50 gaining front, you do have BPCL up by almost 4.5%. Titan, that's up by 2.5%. Some upgrades coming in on brokerage houses reports. Nestle, Hindustan Unilever, the FMCG laggards of yesterday are seen recovering. Asian Paints continues to move up on the support of the crude oil prices. On the downside, you have those metal names: Hindalco, Tata Steel, JSW Steel down in action. IndusInd Bank dragging again for another day. Apollo Hospitals also slightly down in trade. The time now to welcome our guest on the show. Mr. Kranti Baithini joins in from WealthMills Securities. He's the Director of Equity Research. Mr. Baithini, thank you so much for taking the time out for this discussion. You know, the topic that we've been discussing for 2 or 3 days, and that's been a shift from the time we've been seeing the US financial crisis unfold, is now the latest one under talks is the Credit Suisse crisis. Although overnight we did see that the bank and the financial services firm has secured a $54 billion lifeline as the authorities have rushed to avert any global banking crisis thereof. The Swiss bank's announcement also came in to help the stemming of some heavy selling that we had actually seen in the credit bank shares leading to European banks as well. Now, I wanted to understand from you, how do you overall view this entire crisis at this current point in time, and can it really have material impact on the entire Indian financial system as well?
Sakshi, if you have to envisage the entire the current global financial contagion impact that's happening across the globe, first thing is the SVB crisis and the US banking crisis that has been happening in US, that have a ripple effect, the global contagion effect on the European banking system. Whereas coming to the Indian banking system, it is more insulated and it is on better supervision of Reserve Bank of India. And we have strict credit norms as well as treasury norms in India. So in the medium term, the global contagion impact, that's the effect of the news that's coming from US and from Europe, that will have impact in the sentiment of the financial system is concerned. But I don't think so there will not be any material impact with respect to Indian banking system is concerned. See, it is quite evident in 2008 when the global financial crisis happened. In 2008 also, the impact with respect to the banking operations and the Indian banking space is concerned, the impact is quite minimal. But impact the credit flows, the liquidity flows, as well as the sentiment of the market is concerned, and also the flows into the equity market is concerned, definitely there will be some kind of impact. But we need to see it is the beginning of the crisis, how the Federal Reserve and the US policymakers are going to avert these kind of contagion impact, how they are going to manage this crisis is extremely crucial. Because these are the unintended consequences when Fed takes such a very aggressive rate hikes. These are the unintended consequences the market is going to experience, and market is experiencing. How the policymakers in US they are going to handle this situation is crux for the markets right now. We have witnessed same kind of crisis, the liquidity crisis and the COVID crisis. But Federal Reserve and the policymakers in US, the previous policymakers in US, they were quite supportive to the market and they handled the situation in a quite well manner. We need to see the current administration in US, how they are going to handle this kind of crisis going ahead. We need to see.
Sure. But what would be the best strategy to adopt in this kind of a market? I mean, like when we, look beyond maybe 3 months down the line or 6 months down the line, when we look back at this March of 2023, would it look like a great buying opportunity for investors? Should one stay calm, keep investing in some of the fundamentally strong stocks and keep on building their portfolios, even in this volatile market scenario? What would you really advise?
Sakshi, you are absolutely right. Okay, if we sit today and if we think about next 6 months later, if we think about the current moment in the market, we might be thinking we missed an opportunity at that point of time. So investors, definitely there is no hurry. Immediately they can keep their gunpowder with them, and in a staggered manner they can definitely use this weakness in the market in the good quality names. They can use to cherry pick the stocks. They used to, in a staggered manner, they can pick up the stocks in their portfolio. Definitely, it's going to be a great buying opportunity for the long-term investors are concerned for Indian markets on a longer-term horizon. We are quite insulated. We have the better supervisory systems. So I don't think so. There will not be any material impact with respect to Indian banking system is concerned going ahead.
Okay. However, Jefferies has really said that Credit Suisse is more relevant to the Indian financial system than the Silicon Valley crisis that we were discussing a few days ago as well. I'm also joined by my colleague Akansha Chaturvedi, who is going to share some more details on what Jefferies has really talked about of the Credit Suisse crisis and how it could really impact the Indian system as well. Akansha, take it away.
So,
Right. I think there's some technical glitch. I'll come back to Akansha with that as well. But I also wanted to understand from you, Mr. Baithini, that, when we are discussing the Credit Suisse crisis, Credit Suisse is the first major global bank to be given an emergency lifeline since the 2008 financial crisis. And the problems have actually raised serious doubts also over whether the central banks will be now able to sustain their fight against inflation with the aggressive interest rate hikes. Looking at this kind of a impact on the entire financial system, how would you really look at this scenario as well playing out?
It's a little bit tricky, Sakshi, if you have to analyze the situation. A couple of years back, central banks were struggling to create the inflation. The inflation is very low, and they have been printing, they have been infusing different kind of measures to increase the liquidity in the system. And once the inflation has risen, these are the unintended consequences that takes place in the monetary system, in the economy, when the liquidity has been pumped in at a faster pace, and also to tame the inflation when the central banks takes measures to control the inflation. If they increase the rates at a faster pace, these are the unintended consequences, because the systems, that means the monetary systems in the West, they are not prepared for these kind of rate hikes. That's how the current crisis are emerging. Whereas the Indian banking system is concerned, we are not, we never had a zero negative interest rates. Our systems are more secure, and our monetary policy is always aim is to keep the inflation under control, and also the required liquidity only Indian banking system, Indian monetary policy system provided in past, we can say in the last 1 decade. So the economy and as well as our banking system is much insulated because of these reasons. Whereas the West, they have been printing the money and they kept the interest rates at zero rates. And once they risen the interest rates at a faster pace, these are the unintended consequences that dampens the mood as well as the systems of the banking at various geographies.
Okay, understood that as well. Let's move on to understanding some more sectors that have been buzzing in trade and perhaps also showing some more vulnerability to the entire banking crisis that we are looking at unfolding at the current juncture on a global footing, that is. I'll talk about some of the rate sensitive sectors with you, the realty space, for example, and the auto space, for example. What could be the repercussions for these sectors? Because we're looking at an uncertain era right now. Just like how we discussed, of course, central banks around the world would be looking at how they are going to be really taking forward their own strategies against inflation, given the kind of impact we are seeing of the aggressiveness that they have so far shown on the interest rate fronts as well. What will happen to the interest rate sensitive sectors, and how should one approach them particularly?
So actually, definitely, when we are in a high interest rate regime, when the cycle of interest rate cycle is moving up, definitely the rate sensitive sectors will have a negative impact. But what's happening is in India, we are seeing a contradictory for the normal conditions. Okay, I can say it's a paradoxic kind of situation. When the interest rates are going up, the rate sensitive should come down. Whereas if you see the auto sales, they have been at a faster pace. There is a shortage of automobile, semiconductor, and also auto sector numbers have been, when you compare on a month-on basis, they are improving. Okay, we have not witnessed any slowdown with respect to the auto sales are concerned. Whereas with respect to reality also concerned, there is no depressed kind of situation. Okay, the numbers are the realities are the numbers that are coming from these reality companies are quite
Sure.
encouraging. So it is completely premature to say right now in India. The rate sensitives have been a negative impact on their business models. We need to wait and watch for some more time how this entire scenario will evolve in next few quarters. So
Right.
completely right now, if you see the ground level, they are at a very comfortable situation because the reason is we never we were never in the ultra monetary expansionary policies. We are always, India had a tight monetary policies. That is the reason we can see some stability in the system as far the interest rate sensitives are concerned in India.
Absolutely. And since you mentioned that there are some encouraging data points coming in from the realty space, we do know that DLF has sold about 1137 flats in Gurugram for over 8,000 crores, and that's just within 3 days or so. And the stock is up by 3.3%, buoyed by the sentiments as well. How would you really look at DLF as an opportunity amid this encouraging news as well? Before that also, we actually saw Godrej Properties also report encouraging numbers of selling, their luxury flats as well in such an encouraging fashion. This is amidst the entire uncertainty and the recessionary fears that we've been talking about. But perhaps their luxury division is doing very well for all the realtors. Godrej Property is also up by half odd percent today. Your thoughts on this entire space? Some of the stocks that we've discussed, any of them on your radar?
Sakshi, that's why I told you this is a paradoxical situation. Okay,
Yeah.
contrary to the normal market point of view, that's what the modern India is all about. So coming to the real estate space is concerned, of course, the quality names definitely they are going to benefit in a longer term basis. Definitely, investors with a long term horizon, they can pick up stocks like Godrej Properties and DLF for a longer term basis. They can enter into these names at a very staggered manner. There is no hurry. Investors need not have to jump and buy the stocks right now. Probably in a medium to short term, they can trade in these names. But whereas the longer term is concerned, one can pick up the stocks at a staggered manner. They can pick up. One can look into names like Macro Reality also, which is the name of Loda. Okay, the stock has seen some kind of outperformance in the past 1 month. At the dips also, one can look at these names. Look at these
Okay.
names.
Okay, understood as well. I'll also talk to you about Patanjali Foods. The stock has slipped about 4% today, and that's amid the news of the freezing of the promoters' holding of the shares because they've not been able to meet SEBI's norms as far as shareholding is concerned. And in fact, the shares of the promoters will remain frozen until April as well. What could this mean for investors who've been holding this stock, and how would you really advise them to approach now?
Freezing promoter holding by the regulators because of the different norms, it will not have any material impact on the financials of the company and the performance of the company. Uh, Investors with a long-term horizon, because the company has been doing very good in terms of their FMCG business is concerned and the food business is concerned. So one can utilize this opportunity in the this stock also suitable for the high risk appetite investors. One can use the current weakness in the stock to accumulate for a longer term horizon. Definitely from this level, investors can get mid-teen returns, 15 to 20% returns from the current price range.
Okay, understood that as well. In the end, we'll also give you an update on the crypto levels as well. Now, remember that the banking crisis that we've been discussing, which has been led by the Silicon Valley Bank crisis and Credit Suisse as well, that has impacted the crypto world as well. And we've been seeing Bitcoin, the most popular digital coin, that's fallen even further. It's now trading below $25,000. And on your screen, you can actually see all the numbers of the top crypto assets right here. So Bitcoin is down by 1.5%. Wrapped Bitcoin also down similar levels as well. Pax Gold is up in fact by 0.8%. Slightly mixed reactions. Ethereum, however, has taken a bigger beating of over 3%. Maker is down by 14 odd percent as well. BNB, Monero, and Bitcoin Cash are some of the other counters that you can actually see that are seeing reacting to this entire crisis. Mr. Baithini, one word on the cryptocurrency space as well. We've been seeing a volatile reaction to this entire crisis unfold, but investors have been looking at this as an opportunity as well. What would you really tell all these investors of crypto assets at this point in time? How should they be approaching their investments?
Sakshi, these are all very high risk appetite in trading games. So one with a risk appetite who can take, you can say ultra risk. Okay, they can look trading in the cryptos. Otherwise, for a nominal investor who is not aware about how this the entire monetary system works, how the crypto world works, definitely they can stay away from this avenue. But whereas for the high risk appetite traders, okay, definitely they can look some names to trade in the medium to short term, because whenever there is the banking crisis or a global contagion of financial things that happens, obviously the interest in cryptos will rise. And one thing one need to understand, Sakshi, we are in a high interest rate regime. So how far this high interest rate regime is going to continue? We are not sure whether we have been telling we are at the peak of the interest rate cycle, because when there is a tight monetary policy, when the banks are becoming strong, then the alternative assets like we can say the cryptos will not perform on a longer term. Whereas when there are crises, when the interest rate cycle is coming down, there is a chance for these kind of other avenues like crypto can perform in a medium to longer term, in a medium term basis. So one need to aware the differences. They need to understand the risks associated with these cryptos. Then only they can take any call rather than blindly investing, just looking at the price movements.
All right. Well, thank you so much, Mr. Baithini, for being with us on this show and discussing the various sectors and stocks of the stock markets and the crypto world as well, and sharing your thoughts on this entire crisis in the banking space that we are looking at currently as well. When you look at the markets, it's down by 100 points on the Sensex right now, 57,450. The Nifty is also hovering below that 17,000 mark as well. So another day, in fact, the sixth consecutive day when the markets are still in the red zone. We'll have to keep an eye out on how the second half, especially the last 2.5 hours, really unfold for the markets, and do we see any bounce coming in with any support coming in from the global markets as well. With that, we wrap up this edition. Do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. You can also continue to engage with us on our other social media platforms. That's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.
High voltage drama in Pakistan.
पता है कि जान को खतरा है लेकिन